So GST is going to be a game changer. This is going to change the way we are doing business. This is going to change the way in which we are habituated in tackling the tax officers or meeting the tax compliances. Let me first touch upon what is goods and services tax. So this tax is universally also known as VAT, value added tax. Across the world, this is known as value added tax or goods and services tax, GST. India would be the 161st country, I repeat, 161st country in the world to implement GST. The first country which introduced GST was France in 1954. Okay, and India would be 161st country to introduce GST. And surprisingly, Malaysia was the 168th country to introduce GST. If you see the analysis, the history of it, Malaysia started in the year 1990 to go into GST, and they implemented GST from 2015. 25-26 years it took for them to get into GST. India is getting ready per se from 2010, and by 2017 it is going to get into GST. A very small time, such a big country, so much of constitutional challenges. Still, we are going towards implementation of GST, and the whole world is looking towards India. How GST will be implemented in Indian situation, under Indian circumstances, political challenges, constitutional obstacles, everything are getting settled. So GST is not only a tax change or a tax amendment. This is a change. This is an economic change where everybody shall be forming part and parcel of GST. As we move ahead, for India, GST would be a destination based consumption tax. I repeat, India is going to follow a GST which is a destination based consumption tax. We all know the meaning of the word tax. Tax is a social cost. Tax is not a fee. Tax is a social cost which is to be paid by one and all. Consumption. GST would be depending upon consumption, where you are consuming the goods or availing the services. Either the goods are consumed or services are availed. Destination based. If the goods is moving from, let's say, state A to state B, if the goods are moving from this particular place, then tax will also move from state A to state B under a destination based principle. Why? Why is this particular method followed, or why is this particular model followed in India? We need to understand this. So, let me repeat it. Destination based consumption tax. Tax is a social cost. Goods, consumption means goods where it is consumed or services are being availed. Destination means goods or services plus tax will move with each other. Why was this method followed? Because in consumption type of GST, I repeat, in consumption type of GST, there is no difference between goods and capital goods for taking input tax credit. Number two, this method is promoting investment. This consumption type of GST is promoting investment. So, we look into the concepts or the missions like Make in India. Make in India can be made possible if India goes in for a consumption type of GST. Okay? Destination based. In case of destination based, all exports are zero rated. Just imagine, you are a manufacturer. When you are going to export the goods out of the country, the GST will be nil. As a result, what will happen? The cost of the goods or the services which you are going to provide will come down. You will gain price leadership in the international market. How is it possible? It is possible only if it is a destination based consumption type of GST. And when the exports are zero rated, the cost of goods or services will get reduced. You will have more production in India. And to have more production in India, you will have more employment opportunities. Employment opportunities will go up. So, can you now imagine that this one single line, GST being a destination based consumption tax, how are we planning to develop the country's progress? The country's progress will depend upon this particular theme or the model what India is going to follow. I repeat, destination based consumption tax. Everybody says that GST is a destination based consumption tax in India. But friends, please understand the economic rationale of why is it a destination based consumption tax and why it is not something else. I'll tell you what is that something else. But to repeat once again, tax is a social cost which everybody should pay. Are we all paying taxes? We need to check it out. Consumption tax. where the goods are consumed or the services are provided. In this particular consumption type of a model, there is no difference between goods and capital goods. Means capital goods is nothing but assets. For the purpose of claiming ITC, input tax credit. And this particular method is going to promote investment. So jointly, this is forming the base for Make in India. Not only that one, in case of a destination based principle, consumption tax, all exports are zero rated. Just take an example, that cost of the goods is 100 rupees, it has a tax of, let's say, 28 to 44%. This is the government report, that cumulative tax in a 100 rupee cost is around 28 to 44 rupees. You are an exporter. Just think, cost 100 minus, let's say, tax is 28. If you reduce it, because tax will be zero, then the revised cost will come up to how much? 72 rupees. You are going to be a price leader tomorrow in the international arena. The cost of goods or services will come down. And when it comes down, your demand would be increasing. So more production in India. See, Make in India. And since there is more production, more investments and more employment opportunities for you, me, and all those who are now pursuing their education, graduating or graduates. Because the Prime Minister or the Government of India has announced the schemes like, what are the schemes? Digital India. What are the other schemes? Skill India. Digital India. You have to be digitally literate. You have to be skilled enough. Whichever trade you are in, whichever fraternity you are in, be a student of science or commerce or arts, you have to be skilled enough. You have to be employable. Got it? Why is it done? Because to make you employable. Friends, 55% of the Indian population are between the age group of 18 to, let's say, 40, which is known as the demographic dividend for India. But many of us, I repeat, many of us are not employable. That means we have a degree, but we are not skilled enough to be employable, to be employed by an employer. There's a big difference between what we have learned in theory and what is there in practice. So, we have to bridge this gap. And this is the best time. I assure you, this is the best time ever to get yourself skilled up. Because GST is going to be a new law. The Companies Act 2013 is comparatively new, with amendments coming up every day. And with the change or introduction towards GST, introduction of GST in India, the accounting policies, the accounting techniques, everything is going to go for a change. The IT has to be aligned with the requirements of GST. Ind AS, you must have heard about Ind AS, Indian Accounting Standards, which is IFRS Converged Accounting Standards, is newly introduced in India. Under Income Tax Act, you have got ICDS, Income Computation Disclosure Standards, which is new. You have a Foreign Trade Policy of 2015 to 2020, which is new. You have a SEBI rule, SEBI rule, which is almost new. You have a Benami Transaction Act, which is new. So there is nothing to worry. Everything is new. Everybody shall have to start from scrap, from zero. You and me. The difference is that you are understanding what is GST. I am on the opposite side. I am guiding you on GST because I have started reading it and knowing it maybe a few years earlier. That's the only difference. Otherwise, there is no difference between you and me. I'm sure that after a certain point of time, you would be also standing in my place and guiding many of your youngsters or the future generation. So once again, the basics of GST before I go into the intricacies. Goods and service tax, universally or internationally it is known as value added tax also, VAT. Don't misunderstand with the VAT which we had in India. It's a destination based consumption tax. As I told, why it is a destination based consumption tax, or what are the features of being a destination based consumption tax. It is going to promote the economy. It is going to change the way we were looking into India. It is going to change the way we were functioning. Consumption type of GST is promoting investments. And destination based consumption type of GST, rather destination based, can only be applied if it is an open economy. It cannot be applied in case of a closed economy. Friends, India had opened up its economy much wider in 1991. So, going towards GST, India have the required platform. So this is about GST. But the next question is, why are we going to throw out the age-old system which was practiced for so many years? Why are we going to throw out the age-old system, and why GST? Right? So, if I take up the next way of discussing GST, why? See the present structure. Present indirect tax structure. Now, before going to the present indirect tax structure, let me tell you in short, which is known to everybody, still, there is a direct tax. Here we term it as income tax, only one tax is left over here. And there is an indirect tax, a bouquet of taxes. Income tax or direct tax, the incidence of tax is on a person. Is on a person. Okay? You and me, earning money, shall have to pay income tax if it crosses a particular limit. But indirect tax, the incidence is on a transaction. Transaction. This transaction or an event can be manufacture, can be sale, can be a service. And I will discuss now over here these things which will justify why is India going for GST. Okay? So, in a nutshell, tax of two types. Classification, broad heads. Direct tax, we only have income tax over here, where the incidence of tax is on a person. I am earning above a threshold limit, I have to pay income tax. You may not be earning above that limit, you may be earning, may not be earning. If you are not earning, crossing that limit, you don't have to pay tax. But you and me, even the most richest person in India and poorest person in India, will have to pay indirect tax on goods or services. Take an example. You have purchased a packet of biscuits. There is a tax into it. You had to pay, I had to pay, the richest person had to pay, the poorest person had to pay. That is indirect tax. They did not see who is buying. They only saw there is a transaction. Direct tax, you may be earning, but below a limit. You need not pay tax. I may be earning, up to a limit, I have to pay a tax. Somebody else is earning, even higher than me, pays higher rate of tax. This is what direct tax and indirect tax. So let me justify now the present indirect tax structure, and then we can say why is GST required for India. See, present indirect tax structure, I am just saying the major components only. Major components only. I am not discussing all. When you make a manufacture of goods in India, you have to pay excise duty. I am just cutting short for your overview. Whenever you manufacture goods in India, you have to pay excise duty. Just go and see the Cadbury which you have, make in India, or made in India, sorry. It is made in India. The biscuit which you have, made in India. Keep it in mind that the Cadbury or the biscuits, when it was manufactured in India, the biscuit manufacturer or the Cadbury manufacturer, or in that case any other product or goods, had to pay excise duty because they have manufactured goods in India. If there is a service provided, then you have to pay a service tax. If there is a sale and if it is within a state, then you have to pay VAT, value added tax. But if it is from one state to another state, you have to pay CST, which is the Central Sales Tax, and this is the Value Added Tax. And whenever there is an import or an export, you have to pay customs duty. These are the present indirect tax existing, major one. So on manufacture, it is excise duty. On service tax, on service provided, it is service tax. On sale, it is to be seen whether it is within a state or from one state to another state, and customs duty. Now the funny thing is that, and that's a challenge which India is facing presently, that this is an origin based taxation. This is a destination based taxation. This is again a origin based, and this This is again a origin based taxation. Now see the complication. You have an origin based taxation, you have a destination based taxation, you have an origin based taxation, you have an origin based taxation. And this is maybe, some people can say this is origin based plus destination based. And see the challenge. What is the challenge? The challenge is therefore, you have to comply with different sets of compliances. One is an origin based. The moment you manufacture, there is no requirement whether it is sold or not. You have manufactured, pay excise duty. Then again you have sold, pay either VAT or central sales tax. You have imported or you are going to export, pay customs duty. You got a services done, you have event service, pay service tax. Now this is killing the Indian industries. The investors in India are getting grilled because of the complications enshrined in these acts. Now all these are going to go away. Why? Because India wants its investors to give ease of doing business. The government wants the investors must have the ease of doing business. So all these acts are to be dispensed of. These all acts will get subsumed. All will get subsumed into GST. Subsumed to GST. Right? So, manufacture, service, sale, except this customs duty, this portion, customs duty remains, will be getting subsumed towards GST. Customs duty continues to be so. Okay? So this is what the government of India is trying to bring about, simplicity in the tax structure, easing out the business operations for the Indian investors or investors in India, so as to support this Make in India, the Digital India, the Skill India and all these missions. Right? So, please keep it in mind that these different 4 important quadrants will not be continuing under GST era. There will be actually around 17 different types of taxes which will get subsumed into GST. I repeat, around 17 type of different taxes, state taxes, central taxes, local authority taxes, including entry tax, will get subsumed into GST, because to promote ease of doing business in India. And last but not the least one, at the present moment, if I give a numerical analysis, you will be able to understand what GST is going to do for us. Let's say, present tax regime, you have a cost of goods rupees 100. On such cost of goods, there is a tax. Let's say an excise duty paid at the rate 15%. This 15 is calculated on 100 rupees, it becomes now 115. Plus, let's say there is a service tax or a VAT. Let me put an example of a VAT at the rate 10%. This value added tax at the rate 10% is applied on 115. It becomes 11.50, 126.50. tomorrow what will happen? Tomorrow, in GST era, the cost will remain as 100 plus CGST, let's say at the rate 10%. CGST is the central GST, we will discuss it, plus state GST, this is the state GST, let's say at the rate 10%. Both this 10% will be calculated on the base figure, 10 and 10, it becomes 120. Just imagine, you could say, why have I put 15% and 10%? Even if you put a tax rate, let's say cost is 100, the CGST at the rate 12%, plus let's say VAT or SGST at the rate 13%. See, I am trying to put 15 plus 10, 25% as 12% and 13%. What can be 12.5 or 12.5? Anything you want to put. This will be calculated on this one. This will be calculated on this particular figure. It becomes 125. In either of these cases, there is a cost reduction. Over here by 6 rupees, over here by 1 rupee. Okay, this is what GST is going to do for us. There is not going to be any cascading effect. What is cascading effect? This 10% when we were calculating, we were actually calculating on 115. 115 has got two elements, 100 rupees the base element and 15 rupees the tax element. So we had actually calculated tax on tax. And if you look into this breakup of 11.50, which was 10% of 115, on 10% on 100 was 10 rupee and 10% on 15 is 1.50. That became 11.50. This is the cascading effect. Today, you and me, everybody is facing this cascading effect. Tax on tax. Cost is going up. Unintentionally. But you can't help it. I can't help it. The law is such framed that there has to be a cascading effect, tax on tax. Tomorrow, under GST era, the tax will be calculated always on the base price. So the cost will come down. Does it mean cost is going to come down for all? No. There are going to be some services which will be a bit costlier. But you don't deal only with the one service. We are dealing with hundreds and thousands of products, goods, and a few of those services which are costly services. So apparently what we find that cost of goods would come down, cost of services, many services will come down, cost of some services will go up, but the total kitty of tax cost will come down. And when the tax cost comes down, what is going to happen? See the chain effect. The chain effect is that we learned and we all know, we did not be tax literate. We all know that if my income is rupees 100 and my cost today is 90, then my savings is 10 rupees today. Tomorrow in GST, even if my income remains 100, this cost would come up to 80 rupees, come down to 80 rupees, the savings will go up to 20 rupees, there will be an increase in savings by how much? 10 rupees. Increase in savings means what? Friends, there will be an increase in consumption. There will be an increase in demand. And when there is an increase in demand, there will be an increase in production. And the cycle continues. This is what GST is going to do for us. It may not increase my income per se immediately. My money income will not increase or may not increase. I will not say will not increase, may not increase immediately. But if your cost reduces, your savings increases. And if the savings increases, it increases my consumption capacity. I will buy more. My standard of living will go up. And when I buy more, there will be an increase in demand. And when there is an increase in demand, to meet my demand, the supplier has to produce and supply. And when they are going to produce and supply, they have to keep skilled professional. They have to employ people. They have to engage resources. And you, who is now thinking about what will happen in your future, don't worry. GST is going to have room for all people at different levels. Only you need to get ready and grab the best possible opportunity in front of you. So this is not a tax change, it's a national or an economic change, it's a economic growth and development which the government of India is thinking all about, right? So I think I could convince you why GST. Then let me take you to something else which will say how to levy GST. Levy basically means how to charge, basically. Like, can you put your vehicle parking on the road? The answer is no. If there is a parking space allocated for you, you go and park. The police will not catch you. But if you are parking in a non-parking area, no parking area, or parking wrongfully, the police has the authority to impose a penalty on you. What I meant to say is that levy means the power. From where will the government get the power to impose tax? GST, we are now going to discuss how to levy. Friends, the word is goods and services tax. There is no differentiation between goods or service. It's a single tax, one single tax. Okay? If I say that it is in India, or let me tell you in a different way before we start on this. Under GST, the taxable event will be supply. See, the central excise, if you remember, few minutes earlier I was discussing, manufacturing was my taxable event, I had to pay central excise duty. There was a service, I had to pay service tax. There was a sale within a state, I had to pay VAT. There was a sale outside the state, from one state to another state, I had to pay CST, Central Sales Tax. Those were incidents of tax. Or under GST era, the taxable event is known as supply. I make a sale to you. Normally, in accounting parlance, we say sale. Let's say today sale, it will be termed as outward supplies. And when you talk about purchase, this will be termed as inward supplies. So accounting wise, it is sales. Accounting wise, it is revenue from operations. But for GST purposes, this will be taken as outward supplies. When you make a purchases, for accounting purpose it is purchases, but for GST purposes it is inward supplies. So the taxable event being supply, therefore we require now 4 simple things, very simple things. To whom was the supply made? This can be a registered person or an unregistered person. Registered person means a businessman who is already registered under GST, or an unregistered person. This unregistered person can be either a businessman or a consumer. But a registered person necessarily means a businessman. To whom did you make the supply? When did you make the supply? When? Because this will define the time of supply and my tax liability will also be defined. I have sold you today. Today, the goods which I have sold it to you, means a supply which is made to you, has a tax rate of 10%. Yesterday, it may have a tax rate of 8%. Or it could have had a tax rate of 12%. Or it could have been an exempted goods at all. So time of supply, when did you make the supply, is very important. Time of supply is going to say what is my tax liability. Third one, where did you supply? The place of supply. Hope you remember, GST is a destination based consumption tax. The tax will move along with the goods or services to the place where it is going to get consumed. So we need to be very thorough. Where did I make the supply? This place of supply can be outside India or in India. This can be within a state or from one state to another state. We will discuss it later on. Just an overview. Where, and the last but not the least one is the value. At what value? What is the value of supply? Because on this we will apply the tax rate. Tax rate to be applied. What my point? So, for getting into GST, it's not a ghost, it's a friend for us. GST is a friend to us. For you as a consumer, for me as a professional, for you as a future professional, for you as a businessman, for me as a businessman, as a whole for the society, GST is our friend. We require only 4 simple things with us. What is it? Number 1, to whom did you make the supply? That particular person can be a registered person or an unregistered person. That unregistered person can be a businessman or a consumer. Next is, when did you make the supply? The time of supply. Because the tax liability, the tax rate, everything will depend upon that. Third one, where did you make this supply? The place of supply. Friends, you remember, GST, as I told you once again, is a destination based consumption tax. Where did the goods move? Where did the service get provided? Based on that, the place of supply has to be determined. It can be outside India, it's an export. It can be from a place into India, it's an import. It is within India. If it is in India, it can be within a state or from one state to another state. It can also be from one state to another union territory or between 2 union territories. We will see that. Because if I am selling a goods in West Bengal, then the West Bengal government will get the tax. But if I am selling a goods, making an outward supply, selling means outward supplies, from West Bengal to Jharkhand, then West Bengal government has got no right to collect the tax. The tax will get transferred to Jharkhand through the central government. We will see that. Right? And the value of supply. Take an example.